Hey there, everyone. Dave Keller here with Market Misbehavior. I'm going to attempt to give you a full recap of the U.S. equity markets in 2025 in less than 10 minutes. I doubt sincerely I'm going to hit that mark, but I'm going to give it a shot. And I will tell you that these charts and comments, most of what I'm about to share with you, really comes from a webcast that I did earlier this month in December called Winners, Losers, and Lessons, your 2025 year-end review. And this is a part of a series of 10 questions that I ask myself at the end of every year, a way to review performance, to really think about my routines, how I'm identifying opportunities, and my mindset through all of that. So if you want to dig deeper into some of these themes, you may want to go to marketmisbehavior.com/lessons. That'll be available just into the beginning of January. You can check out the replay of that webcast, go through those 10 questions, and see if it'll help you prepare for 2026 a little better. And a little later, I'm going to share with you some other really good opportunities to prepare yourself for 2026 for sure. But first, let's talk about the S&P 500 here. In terms of recapping 2025, really when I look back, I think of this year in four main phases. And I think if you were able to navigate these four periods well, you probably had a really good 2025. If you struggled this year, I bet there were one or two of these that probably proved to be very difficult. And I would encourage you, as much as we want to focus all of our attention on what we got right, you really grow as an investor by focusing on where you maybe had some blind spots or where it was a tougher period for you to navigate. So these are the four phases that I would talk about. Number one, I think the first thing you had to get right was getting that February peak. And if you look, right, I mean, December of 2024 into January of 2025, February of 2025, we basically were retesting the previous highs. And if you ask me what concerns me right about now, it's December 2025 looks a lot like kind of January, February of 2024, where we'd made a new high in the fourth quarter of the previous year, in this case, and then basically retested that high a number of times. And those retests came on weaker momentum, which is very similar to what I'm seeing here going into the new year, unfortunately. But I think navigating that top was key, right? Recognizing that that peak in February was a major top. And I don't think you have to pinpoint that, right? I think a lot of people feel like unless you sell on that peak day, you missed it. And I just don't think that's how investing generally works, right? For me, I'm happy waiting for the market to tell me that it's no longer in a bullish phase. And that happens when we stop making new highs. That happens when we start making new swing lows. And I think by March, all of that was starting to break down. We broke down through the 50-day moving average. We broke down through the 200-day moving average. We were making lower highs. The moving averages were sloping downwards. We had plenty of signs, including the weaker momentum conditions, that March was a pretty negative month. And that's before the tariffs really came in. That was in early April. So, you know, the peak in February, and I think recognizing the rotation from strength to weakness, the fact that the great bull market of 2024 was softening quite a bit going into an eventual April low, I think was pretty important. Second key thing we had to navigate was this V bottom, right? The rotation from a downtrend phase in March and April to an uptrend phase that really lasted into October. And so that great bull market in the summer, which we'll talk about next, that all started with a V bottom. And I think not staying too bearish in April and certainly into May was probably the second big challenge that you had to navigate, right? And just being courageous enough to get out of a bearish mindset and into a constructive mindset. You know, and looking here, I think that higher low third week in April was incredibly meaningful. That was an important one to note, to see that there was a shift from lower lows to higher lows. Soon after, there was a shift from lower highs to higher highs. And by late April, like, I think you have to be bullish looking back here and recognizing that a V bottom is possible and that it can lead to much further gains. And to be honest with you, if you go to that webcast again at marketmisbehavior.com/lessons, I very much eat crow and describe my own mindset in April and May. I think I was way too long in remaining bearish and not recognizing the strength that looking back seems very clear cut here and fairly obvious. So second main phase was that V bottom. Third main phase, the low volatility uptrend. That's what June, July, August, September were like. This was a grind higher. where we started to see real strength in growth sectors. We started to see the return of the Magnificent Seven, mega cap leadership names. The VIX remained fairly low during this period. This was not a volatile period. This was just a consistent uptrend. And I think the challenge for this period was just remaining fully invested, right? Remaining on offense, not getting too nervous, even though the market was making new highs, even though this plunge in April and all the concerns about potential impact of tariffs was very palpable and very real. The market really didn't have any significant negative momentum during that period. So I think just recognizing the low volatility environment, remaining with things that was working was the challenge there. Then that gets us to the fourth quarter, which I think was the fourth real challenge to get through. And the reality is the S&P made a new all-time high in late October, right around Halloween. And from there, we really haven't made a new high. Now, we have tested that previous all-time high around 6,900. Even in the last week, we have technically made a new all-time high. But it reminds me a lot of what we had in like January and February of 2025, right? These were technically new highs, but they weren't impressive high momentum breakout kind of moves. They very much had the feel of a range bound market that was retesting the upper end of that range. Now the market's still in decent shape. We just made a higher low at the 50-day moving average a couple weeks ago. We just in the last week have made a new all-time high with the S&P closing above 6,900. So that's all good. I mean, none of that is bad. But in terms of the, how optimistic are we about further upside potential beyond what we've experienced so far, I'm just not seeing a lot on the technical side that would validate that as a main outcome. Having said that, I think the challenge in the fourth quarter has been recognizing areas of the market that are showing strength despite the market being essentially sideways, right? From Halloween through Christmas, basically, and even through the Thanksgiving holiday, the S&P has been choppy, but basically range-bound between about 6,500 on the lower end, or 6,550 that is, and about 6,900 on the upper end. So if we're not gaining much from the indexes, where are there opportunities? And that's going to get to some of the groups that I'm going to share with you here in a moment. So I would encourage you to think about those four phases, right? Phase one, the major peak in February, and navigating, recognizing that shift from bullishness to bearishness. Phase two, the V bottom in April, and recognizing the significant shift in momentum from clearly negative to overwhelmingly positive, and not remaining bearish too long. Challenge three was remaining optimistic through a low volatility uptrend, that grind higher where you feel nervous that the market's topping out, but it never really hits a top and just continues to push to the upside. And then phase four, finding opportunities to outperform and to gain on an absolute basis, even though the markets themselves are sideways. So I would encourage you to think back through those four phases. Which of those four did you really get right? And think about what it was in your toolkit that helped you to navigate that period very, very well. Even more important, I would encourage you to quickly get to the other question, which is, which of these four phases did you struggle with? For me, I think the April low was the most challenging, but others struggled with other parts of this year. And I would encourage you to focus on that. Think about what could have helped you to navigate through that period. And I will tell you, we'll talk about some leadership changes through the year. We're going to dig into one particular technology name just to demonstrate some of the due diligence I think you could do to validate a potential investment candidate. But I do want to let you know that I think the way that you navigate a period like 2025 is surrounding yourselves with resources, tools, and support to help you make sense of the markets in challenging conditions. And I will tell you, Seeking Alpha has been one of the platforms that I've used heavily in 2025. I plan to continue that in 2026. I would encourage you to check out their capabilities. You can find more info at marketmisbehavior.com/Seeking Alpha. I'll highlight with you three things that I find incredibly valuable on the platform. Number one is the stock screener. They do a great job of just surfacing ideas. When I think about stocks that can perform well during a sideways market period, stocks that can perform well during a low volatility uptrend, stocks that can do well even during a major top or bottom, it goes back to looking for consistent periods of strength, consistent qualities and characteristics that tend to define successful names. And I find on the using the stock screener, looking for things like high dividend yield stocks that pay a healthy dividend, that also are rated highly using the Quant model. That's the proprietary Quant model hosted on Seeking Alpha. I think that's a way to find compelling, potentially defensive plays paying a decent yield, but that also score well, are showing the characteristics of previous winners. I also, second thing I like to use on Seeking Alpha is what they call their comparisons or comparison tool. It's basically like a peer analysis. So you can look at something like aerospace and defense or artificial intelligence, semiconductor stocks, beverages, because I was taught when the going gets tough, the tough get eating, smoking, and drinking. That's the late, great Alan Shaw, who ran the technical research department at Smith Barney back in the day, used to talk about, that was his phrase, talking about investors getting defensive. So, which areas of the market, which particular stocks could do well. It's a great way to bring up a particular idea and then look at the actual stocks that are in there, do some initial comparisons based on valuations and earnings and quant models and other things, and then start to make a more informed assessment about where you could find an opportunity. Finally, I'm a huge fan of their portfolio tools. This is a test portfolio that I have on there. I love looking at the health score, sort of like taking your portfolio to a wellness check at the doctor, right? At your family doctor, just getting a sense of where things. This isn't like something's not broken, right? My foot's not killing me. This is more just a wellness visit, trying to just check in and make sure that things are generally healthy. And this is a great way to just focus on some potential danger areas. In this case, I've got one that's on a performance risk, so I'd probably dig a little deeper into that one and see why it's not scoring particularly well. I love how they roll up dividends to the portfolio level, so you can start to think about consistency or the safety of those dividend payouts, the growth in those dividends, and what the actual income would be based on the portfolio specifics that you import. Finally, it's not just about the quant model on Seeking Alpha, although I think it's a pretty well-designed model. They also include Wall Street analyst ratings, also different quantitative model grades, so I can look at different facets of the model like valuation or profitability or momentum, and really think about where there could be some opportunities for me to upgrade my portfolio to address some potential areas of weakness. By the way, if you join Seeking Alpha very, very soon, you can participate in some really cool stuff they have going on the first week in January. Steve Kress, who I interviewed on my podcast earlier in 2025, and who manages the quantitative research team at Seeking Alpha, he will be doing a live webcast on Tuesday, January 6th at 12 Eastern, 9 a.m. Pacific, called Top Stocks 2026. He did one of these events back in 2025. It was brilliant. It was an excellent session. Really highlighted some potential areas of opportunity for the year. You can check out Steve's top stocks to highlight on January 6th, only if you are a premium or pro member at Seeking Alpha. By the way, if you participate, or even if you miss it, on January 7th, there will be an article that will summarize some of his findings. You'll also be able to access the replay as a premium member. You can go to marketmisbehavior.com/seeking alpha for a special deal to become a premium member today. Also, you can bundle that premium offering with their Alpha Picks, which is where Steve Kress and his team hand select top performing names, top ideas that they call Alpha Picks. You can get a bundle of the premium and Alpha Picks together today. Go to marketmisbehavior.com/SA bundle for Seeking Alpha bundle. So with that in mind, right, how do we think about this this year, and how do we think about the leadership? Because I think through these 4 periods, one of the big sort of stories was the fact that the leadership shifted quite often. But you'll find some consistent performers at the top here. 3 groups in particular that did pretty well through the course of the year and outperformed handily. First, semiconductors, right? Big technology. I mean, this is the most common, this is the most obvious one, right? The AI trade really exploded in 2025 in a very good way. The SMH is the semiconductor ETF that I'm highlighting here. Off of the April low, it took off, broke above the 200-day moving average, and just continued. In October, November, December, it's very much range-bound, very similar to the S&P and the NASDAQ, but the relative performance has been very, very strong through the course of the year. And I think that's one of the consistent features of these three groups that I'm going to highlight. Second leadership theme is precious metals. I'm looking at the gold miners here, ticker GDX, which is the VanEck Gold Miners ETF. Silver even better. I mean, silver ETF up 130% or so year to date, maybe even more. It's been a choppy week on the SLV and the silver stocks, but overall, physical silver has had a remarkably strong year, and silver and gold miners have both done very, very well. So this is the GDX. This is a gold miner ETF. Nice uptrend phase, remaining in a primary uptrend above upward sloping moving averages. Momentum strong, but not excessive, but the relative performance is at the bottom. This shows you how the GDX has done versus the S&P 500. Consistent, strong performing group. Finally, pharmaceuticals. The XPH is the S&P Spiders Pharmaceuticals ETF. The outperformance here really came in the second half of the year. If you start the clock at the end of July, look at the relative performance just accelerating to the upside. This is when the pharmaceutical ETF broke above the 200-day moving average and then didn't look back. At this point, we're in the proper order with the moving averages trending higher. Bit of a bearish momentum divergence, which has me thinking about pharmaceuticals in particular and the sustainability of the current uptrend. But for what it's worth, continuing to make higher highs and higher lows. So how can we identify some of these groups like semiconductors, gold stocks, pharmaceutical names? Going back to Seeking Alpha, one of the things you can do is just look at the top rated stocks. This is actually one of the links, when you remember, the links on the left side of the page. And this is basically using their quantitative model, but also looking for, sort of triangulating strong quantitative ratings with Seeking Alpha analyst ratings and also Wall Street, sort of the street opinion on these different stocks. And if you look down the 52 list of what they call top rated stocks, which means all three groups rate these names particularly highly, note a couple groups that start to bubble up. Number one, Micron, which is in that semiconductor ETF, right? Currently the top rated, almost the highest rating you can get in their quant rating at 4.99. You'll see gold stocks and miners like Newmont and Barrick Mining, tickers NEM and B. Go down a little bit, you'll find pharmaceutical names like Merck and other healthcare names as well. So it's not surprising to me, given the dominance of those three groups in particular, the fact that they are currently being rated very, very highly. And it's not just about momentum. It's not just that the trend is good, although you see they score quite well during according to the momentum model. Look at things like growth, which is how they're growing earnings. Things like profitability, which is how they're converting revenues into earnings, right? Look at EPS revisions, which is how the expectations for these companies are evolving. And these stocks that are rated highly from these different platforms are showing some strong strength across the factors, not just one like price and momentum. It's not just that these stocks have gone up. It's that they actually are showing the characteristics of healthy companies growing earnings and where expectations are improving, I think for, arguably reasonable factors. Now let's dig into one of these. I'm going to take Micron just to talk about a little bit about some of the characteristics that tend to be the sign of a good stock. And again, the goal here is to think about as we navigate 2026. We want to rinse and repeat. We want to have part of our process, including the opportunity to revisit names like Micron before they become the best name in 2026. We want to identify these opportunities early on. So what makes a stock like this a pretty good stock? So when you bring up a stock like Micron on Seeking Alpha, I would encourage you to go to the right side. For me, I look at the chart first because I'm a chart guy, but then I also like to look at these links, and the links that I click on are often informed by what I see over here. So if you look down the right column, first off, company rates pretty well, right? The Seeking Alpha quant model rates it a strong buy, but you also have analysts at Seeking Alpha also on Wall Street, and their ratings all pretty consistently positive. Factor grades helps me understand a little bit more about the different ways we can evaluate this company. Valuation, which is where is it trading relative to earnings or sales or some sort of fundamental metric. Growth or profitability, digging into their earnings and how they're able to grow those earnings or how they're able to generate their earnings with their revenue streams. Momentum, which is looking at price action and how the stock or ETF is performing. And revisions, how are analysts revising their earnings estimates, and positive revisions tend to be good. That means expectations are getting stronger and stronger. This one in particular, right, was something like, Micron. I mean, you can see that the price has obviously done quite well. It's one of the top performing names in the S&P 500. So what makes it, right? I mean, is that being unreasonable, right? Are we overvaluing this company's earnings? Well, you can see that the valuation factor, according to Seeking Alpha, is a B plus right now, which is pretty good. 6 months ago, it was a D plus. So how is this company being rated better and better? How is the stock being rated higher and higher in terms of valuations? Well, if we click into earnings, we can dig a little bit into their earnings. And if you look at this chart right here, this is a histogram showing you EPS surprise and estimates quarter over quarter. And the way you read this chart, each one of these columns basically shows you the consensus earnings estimate. So basically what are analysts thinking this company is going to earn. The light blue is the actual reported earnings. And then you can see in the bottom in green, there's a message showing you the beat, because every quarter in the last 4 quarters, Micron has beat estimates. Looking in orange, we see EPS change year over year. So basically, here's the estimates, the consensus estimates going forward for the next 4 quarters. Look at how Micron is expected to earn way, way more. So the expectations, the revisions have been so strong. But not only that, even though estimates have been going higher, the company's been beating those higher estimates every quarter for the last 4 quarters. So the optimism here so far has been well founded, has been justified by the fact that Micron's actually been able to meet those rising expectations. Company's been earning money to match and in fact exceed those expectations going back. We can go further and start to understand a little bit more about the group, how this company rates versus other groups of stocks. And I will tell you, any of these little blue links are clickable. So if I want to see other semiconductor stocks, you just click on the link and you can see other names. Maybe Micron's not the best one right now for you for some reason. You can click on other semiconductor names and get some other ideas as well. So, folks, that is the story of 2025 in terms of the market conditions. I hit about 10 minutes on the market recap, but I added some other stuff just to try to give you some tools and techniques that I think could be helpful going forward. I would encourage you to think about these 4 different phases. Again, go to marketmisbehavior.com/lessons if you want to review those 4 phases in more detail. Hear me talk about some of the lessons learned through 2025, and I hope encourage you to think about some therapeutic performance review kind of questions for you and your own portfolio here at year end. Also, as a reminder, great opportunity right now to check out Seeking Alpha. Showed you some of the tools that I use on the Seeking Alpha platform. It's a great time to join if you go to marketmisbehavior.com/Seeking Alpha or marketmisbehavior.com/SA bundle. Either way, you'll have access to some very powerful analytical tools. Also, Steve Kress's Top Stocks 2026 event coming up on Tuesday, January 6th. That's it for today. I'm Dave Keller with Market Misbehavior, reminding you it's always a good time to own good charts.